Welcome to this month's Market Update. I'm joined today by Phil Naylor, Principal Consultant with Frontier Advisors. Hi there, Phil.
G'day Wayne, how you going?
Very well. Now, plenty of activity, as is always the case it seems when we start these videos. We start with that opening line, but how have markets been travelling just over the last month?
Yeah, as I said, it continues to be pretty interesting space for financial markets this year, and that's true of the last month. When you look at equity markets, they continue to perform quite well, really. So, broadly speaking, the broad global market stock market index is around the same levels now as it was pre-COVID, which is quite remarkable when you think about the pandemic and the huge economic impacts that's having. That said, there are differences across countries and across sectors that is playing out because of coronavirus. The one example is tech stocks. Technology stocks have been able to hold up their earnings in the face of this large global downturn better than other companies. And so that's obviously feeding through into pretty good stock market returns in the US. And then on the other end of the spectrum, you have financials and banks. Banks tend to do not so well when interest rates are at very low levels. So that's feeding into sort of underperformance of those stocks. That is one of the reasons why performance in our stock market here in Australia hasn't been quite as good as some markets overseas.
Well, certainly coronavirus has been the big theme of the year. And, the initial shock is a little bit more than 6 months behind us now. So to what extent is COVID-19 still feeding into economic outcomes and outlooks?
It's a good question, Wayne. It's having a huge impact. It's true at a global scale. Clearly, coronavirus has been responsible for one of the largest global recessions that we're living through at the moment. And we are also seeing that it's an issue that's playing out differently in different countries, and that's feeding through into the economic data. One example is China, which was the first to experience coronavirus and has been able to get things under control quite early, and they've seen a very rapid increase in their economic activity lately. So sort of short-term high-frequency measures show that activity in China is broadly back to pre-COVID levels, which again is quite remarkable. Then on the other hand of the spectrum, there are countries like India that's been struggling with rising COVID cases for quite some time, and their economy has shrunk by a quarter in the first half of this year, which is quite a huge drop. And then Australia is somewhat in between. Australia's economy is contracted by 7%, which by historical standards for Australia, that's a huge drop. When you look at our performance versus other countries, we have done a little bit better. Certainly, we've seen large stimulus come through from the government and the RBA, and we're also benefiting from that rapidly rebound in China.
So, of course, the other big theme of 2020 has been the US election, the run up to the election. And now, as you and I speak today, we've only got a week or two to go before the polling day. So to what extent has the outcome or the potential outcomes of that election been playing on your mind in terms of impacts and outlook?
Yeah, it's been a big issue that it's got a lot of focus in markets, which is warranted. This is a topic that we've done some research on recently, and that research is on our website. One of the takeaways really is that when we think about taking a long-term perspective to investing, that really means sometimes looking through some of the short-term hype, including elections. But that being, for example, when we look at over 100 years of US stock market returns data, what we find is there's very little difference in stock market returns overall, depending on who's in the White House, just as one example. But we do think there are elements of this election that are worth taking into account when thinking about investments. One of those is foreign policy. And we don't see tensions with China disappearing anytime soon, regardless of who wins the White House. So we think those tensions between China and the US are going to continue for some time. And that's a topic that may feed into financial markets for some time ahead.
Thanks, Phil. Some very big themes and factors to consider at the moment. So thanks for taking us through those. And thanks for joining us with this month's Market Update.